Soulstring Media Group presents CEO Summit 2020, a multimedia platform presentation that highlights the brightest emerging and development stage companies who bring potentially transformative products and services to market. Bringing more than a decade of professional digital media services to its clients, Soulstring Media Group specializes in delivering timely, useful, and actionable information to institutional and retail investors across the globe. Now, here's your host of Soulstring Media Group CEO Summit 2020, Chole Roberts.
Thank you, and welcome to today's podcast. This afternoon, we're meeting with William Gorfein, the CEO of PeerLogix, an OTC-traded company that provides real-time streaming data viewership analytics to a broad client base. The stock trades under the symbol LOGX. Hi, Will. Thanks for joining us. Will, the speed at which the broadcast industry has changed over the past 5 years is astounding. As streaming video alternatives have become more prevalent, so has the need for relevant and timely viewer analytics. Your company is exploiting this massive opportunity by creating a package of real-time analytical data that can track hundreds of streaming video platforms. 2 questions to start. What happened to cable TV, and do you think they can recover?
Yeah, good questions. So with cable TV started in the 80s and 90s as basically an amalgamation of as many channels as that were available at the time, which, a couple dozen channels. But basically what happened in cable TV was they lost sight of why people turn on television to begin with, which is for good quality content. Cable companies don't necessarily invest in original content, and this became the opportunity that originally Netflix exploited, but other, I'll call it a la carte streaming services have certainly followed suit, which is making original content available to people on an individual basis for less money. Eventually, consumers themselves started to realize that they didn't need to pay for the 500 channels anymore, and that they could and would want to only watch shows on the handful of channels that they actually were interested in. That began to create cracks in the cable TV infrastructure. And those cracks led to fissures as the cable TV bundle started to break apart. More and more good quality content became available on a la carte streaming platforms, i.e. Netflix, HBO, Disney Plus, etc. And eventually the demand for original content on streaming approached parity with that of, call it, the rest of the channels which the cable TV bundle relied upon. And although the transition to streaming was originally slow, it really became to rapidly grow as consumers began to have more choice and look towards alternatives to their cable TV bundle. And what we're seeing today is that the traditional cable companies are turning more into a facilitator of broadband internet connections and less so a facilitator of actual entertainment content, which makes for an interesting dynamic when it comes to advertising. And as we know, advertising historically has been the underpinning of the content actually being broadcast on cable TV. And now that producers of that content, again, like a Netflix, have a new revenue source to rely on, which is a subscriber base, paying whatever it is, $5, $10, $15 a month. It's interesting to see the advertising model also evolve alongside what was the cable TV model and now is just the TV model, which can include both, but is more and more including streaming as a majority.
So, in short, their challenges can become a PeerLogix opportunity, especially with advertisers needing accurate data to spend ad dollars. Describe the PeerLogix Advantage.
Sure. So to start, let's just refresh on what the cable TV disadvantage is first. And right now, cable TV is shrinking while streaming television is growing, just presenting it conceptually first. And what that means is, as the audience of cable TV shrinks, the ratings for cable television become inherently less valuable on a day-to-day basis, and so does the advertising. Historically, the majority of the ad budgets for major brands have been spent on cable TV advertising. Again, with that audience shrinking, that means becomes inherently less valuable by the day. So the PeerLogix Advantage, in short, is essentially a few things. One of which is, because our data is digital, because it's all derived from streaming, it's inherently real time. All of our clients who depend on our data for whether it be ratings or advertising, which I'll touch on in a moment, they get it in real time. They understand what television and movies are trending today, not a week ago. And that's an innovation which was never possible with the traditional, call it Nielsen, cable TV ratings, or whichever rating service of the past, which is, those ratings were aged by a week plus, but we can deliver these things real time, which proves for a very large advantage. Two, it's important to understand just how fragmented the streaming ecosystem is. There are dozens and dozens of streaming options for consumers. We are actually tracking, collecting viewership from many, and we have arguably the largest streaming television and movie viewership data set commercially available in the world of about 180 million households, which this proves the sample size is incredible, especially when compared to, call it 22,000 from Nielsen. And thirdly, our data can be used for ratings, and then after that audience is measured for a television show, whatever that show is, or movie for that matter, but be it Modern Family, NCIS, etc., after actually measuring that viewership, our data can also be used for digital advertising, which for the first time combines the viewership concept and the advertising concept for either network, advertiser, or brand. So it's a bit of an all-in-one approach that our data can provide, which is a innovative step forward compared to legacy ratings products.
Let's discuss those advantages against the competition. Nielsen Holdings still may be considered the primary data source for viewership data. Can you compare the PeerLogix product to that of a Nielsen rating product?
Sure. So it's important to understand that the Nielsen rating product was designed for U.S. viewership. It's been used for quite some time now, and essentially the Nielsen viewership panel of viewership is collected from about 22,000 homes throughout the country. It's then enlarged to be representative of the entire country, meaning they'll take the viewership from one home and have it represent a population of 1,000 plus homes. So it's very probabilistic, and it's why they call it an estimation. A couple of things have happened, though, especially in the last 1-2 decades, which is both production of shows and movies and advertising is now done on a worldwide basis for worldwide markets for populations in countries other than just the U.S. So whereas Nielsen has a panel for only the U.S. meant to be representative of U.S. households, we're tracking television and movie viewership in about 180 million households from over 80 countries around the world, and we do not enlarge that data set at all. It's not probabilistic, it's called deterministic for a reason, because every time someone in our panel watches a show or movie, that's one piece of viewership. So we don't need to, due to our scale, we don't need to enlarge that panel at all. So it results in better accuracy of actual ratings and better accuracy of ad targeting when the data is used by advertisers to actually then send ads to or direct ads to the viewership of a show or movie. We're collecting television and movie streaming viewership from over 80 countries right now. So it's quite literally a worldwide sample of viewership. And I touched on this before, but I really got to emphasize, nowadays with when Netflix, when Disney, when they have their meetings at the beginning of the year to decide how they're going to allocate and invest content production budgets, they're no longer just thinking about the U.S. suburban home. They really are thinking of international audiences. So it's critical for these processes to incorporate viewership from countries around the world, because there are many cultural nuances to what shows, actors, and actresses, etc., are popular in respective countries around the world. And advertisers follow the eyeballs, as they always have. So whatever those viewership trends are, the advertisers also want to follow those trends accordingly. And so the international data of ours especially, ends up very valuable through the whole media chain from production to viewership to advertising as well.
That's a staggering amount of data. Will, with that much information and in real time, there are some immediate actionable advantages to business professionals outside of just media executives, correct? Who else can use this data?
Well, there's a few very strong industries which are also rushing to adapt here with basically the streaming world having overtaken cable, which is one, the executives at streaming video platforms themselves, such as, and I use a few of these, such as Tubi, Roku, Pluto, Crackle, and again, a couple dozen others. They're all trying to figure out what content to go out and license, put on their platforms for people to actually come sign up and watch it. Because as consumers, we now have so many options that people generally don't want to take advantage of more than 2 or 3 before things become kind of disorganized on your television. So these platforms are all competing for a finite amount of consumers for us. So while they're all having their meetings figuring out which to license, our data is critically important for seeing, again, not aged, in real time, what shows and movies are beginning to trend and which shows and movies to avoid because they're becoming less popular. So the goal of a streaming platform is to have the most competitive content slate available, and our data speaks very well to that. So that's one. And secondly, along the same theme, are investment professionals, be it hedge funds or other investors who are trying to make the most efficient allocation of maybe a Netflix investment, maybe it's a Disney investment, and now they need that signal to understand, again, the streaming popularity of those respective companies' actual content. Our data also speaks very well to that industry too.
Also, it's important to note that Nielsen's is providing historical data and PeerLogix provides real-time data. That's a huge advantage, right?
Right. There are a couple new industries that really need real-time and with large enough scale viewership data of what's happening in streaming for their operations. And these either industries or processes weren't around, a decade ago, which is streaming platforms themselves, be it a Tubi, a Crackle, Pluto, or the couple dozen other new entrants in the space while they're making their own content decisions. And then secondly are also hedge funds and other investment professionals who are looking to make investments in Disney, Netflix, others of the more traditional media companies, and really needing a strong streaming, I'll call it signal, as they call it, but streaming data to properly inform how they're actually going to, again, allocate those investments.
Being first to market is a significant advantage. You also have intellectual property advantages that can raise the barriers of competitive entry against PeerLogix.
Right. So we're fortunate that we filed patents for our technology, business processes, etc. in 2012, 2013, before OTT was really even a household name. We're very fortunate to do so and be essentially early to the game here. We are starting to see the legacy companies pivot away from cable TV, albeit late in my opinion, but really trying to catch up in the streaming space. And our patent portfolio, which has been granted, everything we filed for has been granted and granted over a couple of years ago now, it really doesn't leave a lot of room for competitors to come play in this space with us. So we welcome the competition. We think it's good, and we feel very fortunate that we have a strong and defensible IP portfolio in it, which is something that we feel very thankful that we have.
But out of those competitors, aside from Nielsen, PeerLogix is the only publicly traded competitor. Can being public help expedite your strategies?
Sure. So we found a few advantages to being public, one of which is it's how we've met our investor base. It's given us a great platform to raise capital with. We have raised a moderate amount of capital over the last about 4.5 years to fund our operations and really get us to where we are. Secondarily to that, we've also found it to be a credibility builder for prospective clients who now are clients and also current prospective clients, because ultimately we're held to a higher standard. We have transparency and reporting obligations, and additionally it's allowed us to get a little bit more of a broader following than what a small private company would be able to really garner. So we found it to be a good tool for us to actually grow our business, and also what I've found, grow our following too. And a third tool at our disposal for being public is, down the road we can potentially acquire complementary technologies as we see fit to grow our offering when that time comes.
You touched on potential consolidation in the industry. Do you think a company like Nielsen, or even others trying to enter the space, may need to employ the consolidation strategy to stay relevant?
Well, I think PeerLogix would complement many different media companies and ratings companies, potentially including Nielsen, but we're already seeing this consolidation begin within the last year. It was really kicked off with Viacom's acquisition of Pluto TV for $330 million. Fox then followed suit and acquired Tubi, which is another streaming platform. So we're seeing the consolidation start with the actual media property itself, i.e. where the consumers go watch television, which I think is the natural first step for consolidation in this industry. Forward looking from there, one of these companies, a more forward leaning company, I think it would make sense for them to decide that they'd rather acquire the analytics structure, the advertising infrastructure, rather than build it itself. And then after the media property consolidation has occurred, which we've already seen it start, then it makes sense to start looking at the analytics, the advertising, the supporting sub-industries within the greater streaming ecosystem. So I certainly agree with that question of yours. And I think that story would eventually play out, that the legacy companies would then look towards analytics and advertising solutions to really finish building out the stack.
So, Will, assuming all goes according to your strategic plan, where do you see PeerLogix in the next 12 months?
Yeah, we've seen a massive amount of new streaming platforms launch within just the last year. They're all competing over the same finite pool of potential subscribers and viewers for their platform, and what they're really all trying to do is follow in the footsteps of Pluto TV and Tubi, which is grow a critical mass of subscribers and viewers and either stay independent and mature as their own kind of TV operator or get acquired. And with the enormous amount of new volatility in the space, i.e. just new entrants, new potential value adds, and basically demand for the types of services we offer, whether it be on the advertising side and or the analytics side, we're just very bullish on the space and see us in a great position to effectively compete in this industry.
Will, let's close with this question. What message do you want your shareholders and clients to know?
We're already taking advantage of what has been our first to market status. We filed our first patents in 2013, so we have a defensible IP portfolio. That being said, we have the longest history of viewership data in this industry, which our existing clients derive their value adds from. And those existing clients give us the validation as new, whether it be streaming platforms or other media companies come into the streaming space. We already have the validation that helps us compete for new business as this industry rapidly grows.
Will, I want to thank you for joining us today. From what you said, these appear to be exceptionally exciting times for PeerLogix, and we look forward to meeting with you again soon for company updates. And thank you as well to our listeners. For Soulstring Media Group, I'm Chole Roberts. Thanks for listening.